A good example might be Queensland-based property development company, Sunland. Sunland is or was both a horizontal developer, meaning house and land subdivision type development, but also a vertical developer. So from time to time they would build skyscrapers, predominantly residential skyscrapers. It's a business that's a little bit difficult to follow, particularly the vertical development, because it creates a lot of volatility in earnings that nobody really likes. We are comfortable with that, provided we understand it, which we do. So Sunland kind of ticks a lot of boxes for us. Firstly, it was within our circle of competence, being a property development business. It was a business where the management team were very much aligned with ourselves, having a big stake in the business. We understood how they ran their business, and it was small. And again, a lot of small businesses fall under the radar of many of our peers. So it was kind of in a spot that we liked. And from a valuation perspective, the stock traded at a material discount to the value, just the book value of its underlying assets. So just on that metric alone, it was appealing. What made Sunland even better for us was the very shareholder-focused management team that ultimately got fed up with the way the market valued the stock and decided to wind the business up. And it's an unusual situation because many times when a business is wound up, it's wound up because it's unprofitable and liquidators come in. In the case of Sunland, it was a long track record of profitability, and therefore they had a lot of retained earnings on their balance sheet, which for a number of reasons, not least of which, as I say, the stock was trading at a big discount to the book value. So just winding the business down and distributing that book value was a significant uplift to shareholder returns. But the second component, which was the tax twist to it, was because they'd had a long history of profitability, they had a very large franking credit balance on their balance sheet that they were also able to distribute to shareholders. So as we've said, we are very much focused on after-tax returns. Our investors get the benefit of those franking credits when they file their tax returns. So it was a very good outcome for shareholders through that, what was quite an extended journey. I think we were shareholders of Sunland for over a decade.